Hello, hello, hello. Happy Monday morning, everyone. How is everyone doing? Short-term reversal patterns in the market, so we shall see. But first, breaking news. Ben Bernanke awarded the, what is it, Nobel Prize in Economics. Yay. QE, here we come. Yay. Hey, good morning, Josh. Good morning, Jake. Good morning, Patrick. Good morning, Davey. Today is Columbus Day, which is a federal holiday. Yeah, and the markets are fully. I thought it was Indigenous People Day, Davey. Don't come on. It's Indigenous People Day. Don't get this wrong. And the markets are open, so it's not a day off. There's very little days off if you're a regular market participant. Good morning, Anissa. Good morning, Legion. Good morning, George. All right. Oh, is that October 11th? Sorry. Well, I get them mixed up. I thought it was Indigenous Peoples Day today. Shows you what I know. Don't bother listening to me. All right. We got more. We actually have Fed Evans speaking right now. So if he says anything interesting, let me know. I can't focus on the live stream and do that. Then we got Brainerd speaking at lunchtime, Central Time, 12:35. Stock market mixed, slightly mixed. Fed watch tool, 80% still for that 75 basis points. Still in negative gamma. Still in extreme fear. We're done for the week. Let's call it a week. No earnings today, but remember this week kicks off Q3 earnings. First thing I'm interested in is Pepsi. Then it's not, well, it's a couple things on Thursday morning, but Friday. And also remember, this week is backloaded with PPI, CPI, Fed meeting minutes. So today is quiet except for Fed speak. What have we had so far? We had, yes, this was a valid double bottom in a flag channel pattern. It could have been executed on your 15-minute. It looked nicer on the 1 hour. Remember, if you're looking, I got some questions already. Which is the peak? Is it this one? Well, let me show you something. First, if you're looking at this for the peak, what's the confirmation? Let's see. On this, this would have been, see, if this was the peak, this would have had to been the low. You made a lower low. This has to be the peak right there. So if that's the peak, it's confirmed here with that little trade above. It's actually, and then it's there's the 1 hour breakaway move. If you're trying to trade on the 15-minute, this was the little close. Already essentially first target's hit, almost to the second target. Just that's why I also said last night we don't have a pattern yet. The only thing I was watching was the gap fill play last night. So because we did gap down in the futures, and then you're watching the 62.5, finally the close above the 62.5, and then we finally filled it. Finally filling it this morning. So that's about it. Where did I leave off? Good morning, Sterling. So yes, these are the flagging double pattern. You don't know whether it's going to end in a flag or a double, but the flags. And I've been no way to find what shifts the probabilities. There's been nothing in years of research. So you got to trade it still as a double. And this is definitely one with the conservative targets. This one, the higher low is on the right-hand side. Why? Because even though we're into a clear path move, you're fighting the short-term trend. And the long-term trend is also down. So this would be a corrective move. So you want to use your more conservative. And yes, this is a clear path move. And if you look, this isn't a super strong clear path move, because if you look at the 15 minutes, stopping point, stopping point, stopping point. So the bigger thing is for continued rally. That's where you fine tune your clear paths by looking at the lower time frames. All right, so you have your higher time frames, and then you can do the breakdown zone. I'm actually bringing the breakdown zone a little in roughly on the other side. So the on a continued move this morning, 36.75, and then the other side is about 36.87. This is trailing stop mode. Trailing stop mode. 36.50 is the worst case scenario. Get a close below that. I'm watching for another retest of the lows, which would then be a triple bottom, which would then favor on a higher time frame a continuation potentially. So that's how we've dissected the market this morning. Just keep in mind, there's no longer term daily or anything bounce play yet. The only thing was that short term with possible continued momentum into the open, and any rally would be back into the daily rotation zone. Daily cycle still turning over, weekly cycle still pinned at the bottom, but trying to turn up at this point. So we got mixed messages there. Evans, restricted money policy needed for some time after rate increases ends. They're still beating on that drum. All right, yes, we covered this on Friday. Even with this push down, did this hit the 87.5? You remember that was the next target area for the NASDAQ. So the NASDAQ's at least fulfilled its probabilities when it closed on Friday below the 62.5. Does that mean it can't go lower? No, but it hit that 87.5, which is the first target area. We have also the little double in play, really nice on the NASDAQ. This is the peak, not this. 1139.75 is the first target, not quite hit. Remember, the NASDAQ's been weaker. Remember how we had the higher lows? I mean, this was the higher low, but this is well lower than the other markets. 139.75, 163.75, 187.75. Same analysis. That's the only short-term buy pattern. I have to stress, this is not short. This is short-term. This is bounce pattern only. We don't have anything on the daily yet, or even the 4-hour is slightly weak. And see, this is why I wanted to stress you got to pick the right point. See, here on the NASDAQ, people say, okay, double bottom, here's the peak. This is actually the peak. You have to go down in your time frames because this is actually the peak of it. That's where it takes some nuancing of these once you get into the pattern. I mean, worst case, if you use this as a peak, you're just already raising your stop, but that's technically not the target. Hello, Christoph. There's your little teaching moment. I'm done for the week. Also, against the rotation zones on the higher time frames, so do keep that in mind any rallies. Let's get through some of this quickly. The Dow, this was horror. I didn't even check that. I was not looking at the Dow this morning. 29,165, 29,165, exactly to the tick there. See how I checked it? Do not assume. So this is the peak. This low came down. We had to at least hit 29,165. What did we hit? 29,165. Please don't assume. And that's the peak, and that's the low, and the Dow's already run. So was this tradable on a 1 hour? No. It would have had to been tradable on your 15-minute. Here was when the pattern formed. Remember, if you're being aggressive, I'm not talking about a break. The official rules are for beginners, you're looking for the time frame, and this is well formed on the 1 hour. It would be at least a 1 hour close. And this did close here on the 1 hour. So it could have been traded on the 1 hour. 4 hour, you can't even see it really well on a 4 hour, and you would have probably got the targets wrong. Also returning to the 4 hour. But this is where, for beginners, you use the time frame close. So if it's on a daily, you need a daily close. If it's on a 4 hour, you need a 4 hour close. The next step and more advanced is you can use one time frame below. Remember, time frames should be roughly separated by 4. So on the 4 hour, you can use the 1 hour close. On a 1 hour, you can use a 15-minute close. And then the really advanced, once you get good, you can trade breaks. But I like to trade breaks and retests. Just wanted to cover that. And now we're getting the pause. This is how you assemble things also. So we have the targets for the double. I'm not worried about whether you could have traded this or not, what you could have traded it. But you have the targets, you have the breakdown zone, you have the targets. This is putting stuff together, and you have the rotation zone. So that was really nice, plus a key close, plus a key close. Now, this is not just a minor level. This is what we would call a significant level on a 4-hour time frame. Emotional candle closes, emotional candle slice through, rejection of that key area, and now we have a retest. Now, if we do break through this key area, you are into another clear path move. This is called a single candle clear path, although it was part of a multi-candle clear path. And you break through this minor key area, I'd be watching is 29,560, and then we could have acceleration to the upside. So that's going to be the key area I'm watching in the Dow. You can take that analysis back to the other markets and verify if it's valid. Russell, I do not believe it did have a valid double. See, this was not valid. Ratcheted up. Maybe it was valid right here. 1692.70. 1692.50. Yes, it was. But this is also going to be one with the tight targets. So not going to sit and review it there. Remember to, at this point also, for all these markets, put on your harmonics, start trailing them. You're going to be watching for it and keep ratcheting this up. The key level is to close back below the 62.5. Russell also hitting major resistance. DAX, we don't have a double. There's just nothing, no great pattern, or at least on a daily, there's no great pattern in the DAX besides the gap fill pattern. So DAX, remember, all markets don't have great patterns at all times. So at this point, there's just nothing going on in the DAX for me. The notes, we still have the potential double bottom, very narrow range with daily cycles getting back closer to the bottom, but no shorter term buy pattern yet. Longer term potential buy pattern, but that could be invalidated. I am still watching for a push down move to at least 111. We might get a little pause in here first, a breather. Dollar index, still no close in the higher time frame yet above the 62.5. Remember, 4-hour daily closes are more significant. I mean, you already had the 5-minute close, but why don't I key off for a 5-minute close off a major pattern? Because your higher time frames are more significant. We at least got the 1-hour close. I'm watching for the 4-hour close, but after we get a pullback, key support coming in at 112.67. And then below that would be a return to the 50 and the breakout zone with the rising 4-hour rotation zone. VIX, up a little pre-market, but unless we can really start plowing back above, you just see here. I mean, there's our 62.5. So 32.03. We're above that pre-market, going to be watching to see if we close on a higher time frame above that level. I just need somebody to type in the regular data. Hello, Amit. Oh, wonderful. FedEx no longer, so they're not giving, their guidance is we're not giving monthly guidance. Well, I gotta love it. Thanks for putting this in. There's nothing new there. Still 4, depending on the member, you have 4 to 4.5. Overshooting rate rises as a cost to an economy. People are going to view that as dovish. Rams have all morning. Great uncertainty remains over how high rates must. This is why. Can we get rid of the friggin' Fed? Can we get rid of it? Because you don't know. You're trying to micromanage an economy, and we wouldn't be in this situation. So you don't, and I don't think anybody can model the complexity. It's why these. All right, if you're going to have a central bank, it should be the only thing. It should be lender of last resort, and that should be on a very limited basis. But instead, it's become bailout central, and you can't. They have no idea. They had no idea what they were doing, pumping all the money in, and they have no idea extricating it. And I agree, they have to keep raising, but they created this friggin' crisis. So they have no idea. Let's be done with the whole shebang. Get rid of the friggin' Federal Reserve. It should have never been put in place back in 1913 or whatever the friggin' year was. Get rid of the friggin' thing. Oil taking a pauser. No key, major reversal pattern just yet. This is minor. Remember, from my standpoint, on a trailing stop basis, still Friday's lows are key on a closing basis. There is major overhead resistance here. So this key, remember, this was a clear path move right in here. Breakdown zone. There. So we've hit it now. This gets into choppy area because, look, let me bring in this target just a bit because that's the next full clear path target is here, which is about 90, right in front of the 97. But look, up in this area, unless we get something major with oil, you have lots of stopping points. This is why, yes, if you're long already from down here or something, this is where I especially trail stops. Because do I know where it's going to stop in here? No. So this is very key. But the best way to handle this from my perspective is a trailing stop basis, depending on your duration of trade. And we have the 200 above, which is a magnet area. That's why I'm really focused eventually on the other side. We could get a pausing breather of... Even on a pullback, it would be more of a sideways correction with the rising rotation zone. Now, remember, that does not invalidate yet the longer-term trade that hit the first target area and bounced. Just trying to keep people focused on multi-time frames. Really watching today, it's over in Japan, but watching, we're creeping up to that key major intervention area from before. Paying very close attention to that. Very close attention. Which ties in with the dollar index. Euro, looks like we may today close below the 62.5, but that's what I'm watching for. Why? Because if we close below 97.099, we should see a return to the lows from the end of September. Other than that, I don't have a great bottoming pattern. And it would be, if we did have a major reversal today, it would be aggressive buy above Friday's high only. Bitcoin, not even going to bother. There's still the double in play. Tesla, there's just... It's inside bar still watching for 220.33. Then my next key target is 213.40 area, then the most recent lows. Any bounce, unless we do the harmonic fill above Friday's highs, that's the only thing from the bullish side other than short-term plays, but I'm not using pre-market data for that. Welcome. I take a drink. I'm out of coffee. I'm 8 espresso shots into it today. Thank you for reminding me to take a drink. W browser. Let's see. See now, Amit, you've gone down the slippery slope. I wasn't going to say this, but what the hell? I had a dream that I was in Mario Brothers game and was springing off double bottoms. See? Now you've gone down the crazy path of technical analysis. And you're linking it with Mario Brothers. And for Halloween one year, I went as Mario. See? It's all coming together. I don't think that's crazy. Once you start dreaming about technical analysis patterns, you're on your path. I didn't say where the path would end up, but you're on your path. Mike, I'm making a list of things to monitor and learn about to help me guide in addition to learning the price action. So far, I've got tick and trend, VIX, and to keep reward to risk versus probabilities in. That's a very good list to start with. Everybody should take notes from Legion and start making their own list. Anything else? I sum up probabilities and reward to risk as trade. You can add trade expectancy to the list. You don't need to get super crazy. Then if I'm really fine tuning stuff, I personally use some market profile stuff like for the S&P to help really fine tune levels, but that's way beyond the scope of what I can do in a morning stream. Fed's doing something right. They just got Nobel Prizes. Oh boy. See, you know what? The mere fact that we got a Nobel Prize for a quantitative easing, we're nowhere near a bottom. That's on a super macro. Super macro. Sad part is so many people are going to lose their jobs and small businesses are going to be forced out of business, and it does suck. And you already see this. Remember, even in your economic numbers, you have the larger things like the ISM holding up, right? You have the smaller numbers, like the S&P numbers. I'm not talking about I'm talking the shorter term S&P numbers like the oh geez, I just blanked out. The services and the manufacturing, those are already in contraction. You have smaller to mid-sized businesses already hurting where the larger ones are not. This is going to take a huge toll. Amazon's not going out of business. Your mom and pop places are going to be hurting. Walmart's not leaving. Target's not leaving. They are going to go through some pain, but your mom and pop stuffs and the smaller to mid-size is going to have a lot of pain. Sorry if I'm yelling again. I'm just passionate about this. Following headline from LA should definitely help. Cali's gas price problem, Newsom call special. Yeah, they're already the highest taxes in the country. Let's tax them more. These people are absolute morons. You're a moron. Governor Newsom, sorry, you're a moron. And this is not just with the Cal. There's too many morons in charge. You have been paying proper attention, and that's what's key. Bernanke got the Nobel for his work on crisis. You break it, then you put a Band-Aid on it. Yeah, and your Band-Aid is, let's just throw money at the problem. How much brains does that take? And they keep throwing money at the problems, but now the money has caused the next problem. And they have no clue. And I'm not just talking about our current Fed. I'm talking about I'm talking about all these central banks. You can't model this economy properly. Pick a rule. I don't care there's flaws with the Taylor rule. Pick the Taylor rule and stick to it. Just put a rule in place. We don't need friggin' 12 clowns trying to micromanage this crap. And yes, I do agree I think they still have to keep hiking, by the way. Because I don't know. Yes, and stuff will break. And it's sad, but we went into ballistic mode on the upside. This was not natural price action. You're going to pay for this. By the way, also remember, we have bounced and still holding that 200. If we do break this weekly 200, watch for that potential flush move. I'm going to leave it as that. Please, for more of my silly, pointless rants, if you want to hear more of them, tune in after the close. They might not happen. They're spontaneous. Do not plan them. Although that Bernanke thing got me fired up. It's like, oh, you fire missiles on somebody, you get the Peace Prize. Ah! There we go. It's counterintuitive. Let's just break the markets and then dump money at it, and I get some. That takes strong economic prowess. Can we literally get our head out of our proverbial ass? We can still play the double bottom on a pullback to the breakout area. Yeah, however, you can still use the targets. If you pull back all the way to this breakout area, you've already hit the second target, so that's your probabilities are dropping. So yes, you can use it, and I'd be watching your longer term rotation zone. Essentially, you've already hit the second target area. Yes, you can play back. If you start dropping below the major breakout area, especially this key support, I would not be aggressive. I'd start looking at your market internals. Remember, this is just a counter trend reaction to Friday's death close. All right, I shall talk to everyone later. 1 minute to the open. Thank you, everyone, for tuning in. Sorry for my yelling. If you still appreciate this, please leave some comments when you have a chance this morning and like the videos, and I will be back. You can still play short-term pullbacks at the open. We can still see some more upside. Don't blindly buy something, though. Buy. You're welcome, Anissa. Buy.